Hello and welcome to this week's episode of Nucleus Investment Insights. The question and topic for discussion today is why immigration holds the key to Aussie interest rates. We're going to look at the effect of immigration on inflation and interest rates over the last decade. Then we'll examine wage growth and inflation. Lastly, we'll consider planned immigration following COVID. My name's Sam Kerr and I'm the Senior Advisor at Nucleus Wealth, and I'll be the host of the show for today. As always, we've got Damien Klassen, Head of Investments. Damien, great to have you here as usual. How are you today?
Very well, thanks, Sam.
Good to hear. And we also have Leith van Onselen, the Chief Economist at Nucleus Wealth. Leith, how are you going today?
Yeah, good. Thanks, Sam. Hello, everybody.
Good to hear. So just a quick reminder before we get started, if you enjoy our content, please subscribe to our YouTube channel and click the bell below to be notified when we go live or when we have a new episode recorded you can watch. Alternatively, you can follow us on your preferred podcast platform. Our show's available on all the majors. So now that we've got that little bit of housekeeping out of the way, we'll get into things. So Damien, I'll hand it over to you to start us off.
Yeah, sure. Well, I'll head up pretty quickly to Leith, but obviously, inflation is a big issue for everyone at the moment, and Australia's sort of going through this process of I think the RBA's come out to talk about why we should keep immigration at lower levels to help with wage growth, but both the federal government and to a lesser extent the current opposition seem pretty hell bent on going back to what we used to have. So and we had the Premier of New South Wales talking about catch up. So needing to extra jam pack it in for a few years to catch up for all the immigration we've missed. So I think Leith obviously talks a lot about his strong views on this, but it's worth sort of jumping in to why it does affect. It is going to affect the level of Aussie interest rates over the next few years, depending upon how much immigration is decided to come through. But I'll flick straight across to Leith.
Yeah, thanks for that, Damien. As everyone's probably gathered, there's a big push on at the moment to reboot Australia's immigration program sooner rather than later. The intergenerational report predicted that forecast that Australia's immigration intake would rebound up to 235,000 per year, basically ad infinitum, but not until about 2025. But instead, the federal government now has vowed to bring in 200,000 migrants by July next year. And they actually want to go well ahead of that. As Damien suggested, the New South Wales Premier lodged a plan to bring in 2 million people over 5 years. We've got all the business lobbies obviously pushing to get as many people in as possible to alleviate so-called skills shortages, etc. But there's a bit of a story here that's not very well understood. We've obviously see quite a few economists and markets predicting that the RBA is going to be forced to increase interest rates, possibly even next year on the back of rising inflationary pressures. But my view is quite strongly that the RBA could sit on the sidelines for years potentially if we go back to extreme levels of immigration, because that'll suppress wages, and wages is the key determinant of inflation. And therefore that'll alleviate the need to actually lift interest rates. And it's actually been 11 long years since interest rates were last lifted. So we've had basically over a decade of falling interest rates. And this is quite interesting because if you're watching this, if you actually have the presentation in front of you, you can see that the RBA has missed its wage price forecast throughout the entire last decade. 2014.
So I'll just describe this for anyone listening in on Spotify or Google Podcast or something. Basically what it is, it's the RBA's wage price index forecast, and it's basically fallen from sort of 4% down to a bit under 2 over the last sort of 10 odd years. But it's also showing what they were forecasting at each year, and every year you've got this 45-degree line headed down, and every year there's this popping up, expected to bounce back to higher levels. And that's been so consistently been expecting this bounce back, but it just never comes. And
that's right. And my contention is that the RBA actually admitted this earlier this year. They said that one of the reasons why we haven't had the wages rebound is because the labour supply has continually increased very strongly on the back of immigration. So effectively, in the 15 years leading up to COVID, Australia effectively imported over 180,000 workers a year into the economy. And what that means is when you continually, I guess, increase the labour supply at such a strong rate, it makes it a lot harder to lower unemployment and tighten the labour market sufficiently to drive to drive wage growth and ergo inflationary pressure. So Australia's anemic wage growth is the key reason why underlying inflation has been so low over the last decade or so, and why the RBA has been able to basically keep cutting interest rates. And my contention is that if we just go back to the same policy of just importing a whole bunch of people into the labour market every year, you're going to get exactly the same result. And we could potentially get a situation where the RBA sits on the sidelines for another decade if we ramp up the immigration profile so strongly. And the interesting thing that's happening is at the moment, without so many people coming into the economy, we've actually lost about 500,000 temporary migrants as well, and about 400,000 of those are workers. We've actually seen the labour market tighten quite significantly. So I've put a few charts in the briefing pack, which if you're watching and you're seeing it, otherwise I'll explain it. Show this quite starkly. Effectively, since COVID began, the percentage of temporary migrant workers in the labour market has fallen from about 4% to 1% as we've lost all those workers. At the same time, the number of unemployed Australians per job has cratered to a record low level of just 2. So there's effectively 2 unemployed people per job vacancy at the moment, which is unheard of in recorded history. So with so many temporary migrants having left and not being replaced by obviously an annual flow of 180,000, which is the average that we used to get, we've seen the Australian labour market tighten quite significantly. And just before the lockdowns in Sydney and Melbourne.
Leith, that's I mean, we're obviously seeing that in other countries as well who didn't have run such high immigration rates, and I guess that to me it seems to be there's some structural changes as well in terms of the unemployment. In that, we had a lot of people in the service industries who have now had to change jobs, and once you were a waiter, now you've decided to become you're stacking shelves at the grocery store. To get you back to being a waiter is probably going to take more money, or there's going to be I guess danger money in so to speak, in terms of actually having to go back to a job that maybe has less security if we have further lockdowns. So I guess your thoughts on how much of it's sort of based on that frictional point versus how much of it's based on the not enough immigrants.
Yeah, look, it's hard to say. Certainly, most of the employers across the economy are arguing that they need open borders because they've got a lack of migrant workers coming in. So if you take them on at face value, they're arguing that it's because we don't have the flow of foreign workers coming in. Certainly, I think there is some frictional factors there. Obviously, if you've been treated poorly during the pandemic, you lost your job because you worked in a cafe, etc. You're not going to be too keen to go back to that sort of work after the pandemic, because there's obviously risks that will happen again. You might feel a bit bitter. You want a more secure and stable job. At the same time, we've also got to. I mean, I've got to keep it 100% real here. Part of the reason why obviously the labour market's tightened is also because the government has pushed out a massive stimulus package, $200 billion plus, which has obviously boosted demand as well. So there is obviously stimulus at play as well. But I guess my key point is that when we don't have the labour supply growing as strongly as the economy became used to, the labour market will necessarily tighten. And it's one of the reasons why just before this New South Wales and Victorian lockdowns, Australia's unemployment rate fell to the lowest it's been since the global financial crisis in 2008 at 4.5%. And the RBA has explicitly said that it won't raise interest rates until underlying inflation hits its target of 2.5 to 3%. And we're obviously a long way away from that at the moment. But historically, to get to that target range, Australia has needed wage growth of between 3 to 3.75%. So that tells us, and at the moment it's 2.2%. So that tells us that we do need wages to rise before inflation will likely hit its target range, which will then trigger interest rate rises. And obviously, if you're going to keep pumping the labour supply, well, you're not going to get unemployment down enough. And the RBA has said that it needs unemployment to fall to about 4% or lower in order to generate wage growth with a 3 in front of it. So I guess my point is, if you join all the dots together, if we keep boosting labour supply, unemployment is not going to fall to that 4% level or below to trigger 3+% wage growth, which is required to hit the inflation target and therefore deliver interest rate rises. So this is why I sort of view the immigration intake as the key.
Jumping back, I mean, you've talked about a bit about the businesses the business lobby wanting this. So from an investment perspective, certainly there's a range of companies out there where you'd say, things like your Harvey Normans and your banks and places like that, where if you do get an immigration push, it's good for them in terms of more customers getting jam packed into it. They get to keep their wages low because they've got lots of people around, and so margins are relatively strong. And so it's a sort of short-term gain for a long-term loss in terms of the way you look at from a company perspective. But there's particular types of companies that will benefit more than others. So I guess the companies that are more reliant on
people power.
Sorry, what's that?
Companies that are more reliant on people power. So obviously,
yes.
Your retailers, your Harvey Norman, your property developers,
Mm.
those sorts of companies which basically earn their crust by having more people in the economy to either spend or consume. Those sorts of companies obviously benefit from this. But Damo, you're 100% right in that you say, you said it's a short-term gain. It certainly is, but it does cause structural problems for the economy. So obviously, if you bring in a whole bunch of people, you're going to boost the number of consumers in the economy, right? So there's more people to sell to, which is a win. You also, as you said, you're going to suppress your wage costs, and if my theory is correct, you're also going to keep interest rates lower, which is also good. But from a longer term perspective, if everyone's wages aren't rising as quickly, that also means that in another way, people got less money to spend. And it can also cause, obviously, productivity issues for the economy if over the longer term, if firms in the economy, instead of automating and investing in productive equipment, they just get a low-paid worker. Well, that obviously has productivity issues for the economy. There's a reason why in developed countries you see roads, etc., being built with a small number of people and lots of machinery, whereas if you go to a developing country, they're built with lots of people and very little machinery. And the reason is because labour is a lot cheaper over there, but it's a lot more efficient, obviously, to use to be capital intensive. And if you sort of go towards a lower wage, high, people servicing economy, well, you're going to lower productivity over the long run. That's my view anyway.
Yeah, absolutely. And it's that part, it's like, as you said, where you're saying, say your fruit picking is probably one of those good examples where there's some automated fruit picking, but you probably need, I don't know, $30 an hour wages-ish, or maybe $25 to make that worthwhile to actually invest in these fruit picking machines. And if you can bring people in at $15 an hour and below minimum wages from other countries, then there's a short-term win for you. But the people or the countries that are investing in this fruit picking machines and can then the $30 becomes $28, becomes $26 over time as they improve and they're generating I guess, money from the manufacturing of those things and the creating sort of real tangible R&D and intellectual property, as opposed to just saying, our competitive advantage is we'll bring in as many people as possible and give them low wages. And so, I guess that's where I'm talking about the short-term gain for the longer-term loss. And we've obviously hit on this program a lot about this whole issue of as soon as you start ending up with inequalities that get very large, then you run into that problem that, yes, as a mass, if you're a Woolworths or a Harvey Norman, there's a whole bunch of people just moved in close to your stores, and you've got some of the best areas, and so you benefit from that. But the individuals actually going to these places are the ones that suffer, and then you start getting more political disruption and political unrest because of the wide gaps, and also you don't have the same level of demand. You keep running into the same problem we've had, lack of demand, in that we keep needing to give people lower interest rates to afford the price rises that have happened because we're putting more people through, and you get that left in that circular argument. So completely with you on that. But I guess noting that if this is the way we're going, then and it's not certain we're headed in that direction, but it certainly looks like it at the moment, is that a lot of the companies that did benefit over the last decade, at the expense of the rest of the economy, other ones that will probably benefit again over this period.
Yeah, absolutely. So effectively, we'll be left with sort of a more inward focus, people servicing domestically based economy rather than, say, an export based economy. We'll always obviously export commodities and primary produce, but we're not going to get that more advanced type of manufacturers or more advanced economy. It's going to be basically digging holes and farming stuff and selling that, as well as just catering towards a continually growing domestic marketplace in people, whether it's just building more houses for them, all the consumables that go with it, services, etc., etc. And the problem is, obviously the bigger our cities get with just more and more people, the more the economy becomes focused on just providing services for those people, houses, etc. And those tend to be quite low productivity. Services industries, by definition, are lower productivity than say manufacturing type ones, and or exporting focused industries. And the reason for that is because they're not subject to foreign competition by and large, and also don't use a lot of capital equipment, etc. So yeah, there is a long-term cost to this, not just in in an economic sense, but obviously also living standards, etc. By forcing people to live in apartments instead of houses, and more congestion, etc., etc. Yeah, that's basically the thesis. It's a pretty direct link. Obviously, a lot of economists, as I said, seem to think that we're going to have interest rate rises, and my view is no, we won't, if we just go back to the same model of running a very strong immigration program. So that's going to expand the labour supply. It's going to get rid of that labour market tightness that we need to bring unemployment right down, and to basically give employees bargaining power, and to lift wages. So I see absolutely no reason why, if we go back to this sort of big Australia, big immigration type program, that the RBA couldn't sit on its hands potentially for years, and we could end up just bouncing around with very low interest rates, or potentially negative interest rates down the track, the next cycle, instead of interest rates ratcheting back up. Of course, could be wrong. There could be other inflationary pressures, but given that wage growth has been one of the primary drivers of inflation for a long time, and it's fair to say that if wages don't recover to a decent amount, well, we're not going to have those inflationary pressures.
Now we've got a chart here, Big Australia Rebooted, which sort of looking at this the net overseas migration rates over the last 20 odd years, and looking forward.
15 years actually. So basically, from about 2005, the intake. So basically, the 15 years up to 2005, Australia averaged about 90,000 net overseas migration a year, and the 15 years up to the pandemic, so up to the end of 2019, basically immigration was increased on average by 140%. So it was ramped up quite significantly, and the projection from the intergenerational report is that to average 235,000 a year, basically forever. And in fact, the federal government wants to bring that start date forward to now, effectively. So we're just going to get more population growth quicker than what this chart and what the intergenerational report actually predicted.
Yeah. Now, look, I guess one of the big questions, and I haven't seen anything out there, but is how likely people are to come. So I sort of, I guess, putting it in context, in the financial crisis, when Australia sort of threw its borders open, we were we're one of the few countries that didn't have double-digit unemployment rates and a massive fallout, because China had started its big spending spree, and so a mining sector was sort of booming, which meant that I think a lot of people could come to Australia, or even if it's expats coming home, or people moving to Australia with a view that actually there's employment there and there's something to be found. Now, I know unemployment's quite low around the world, but I guess there are potentially some issues around the whole COVID lockdowns and just a mental thing about, do I want to move to a country halfway around the world, and potentially, if there are more lockdowns or more variants, sort of losing my job and not having a family support network there. I don't know how likely you are once they throw the borders open for people to come streaming back in, or whether it'll be a bit of a slower start than expected.
Look, it's honestly impossible for me to say. Certainly, Australia's facing more competition for migrants than it did pre-pandemic. So the easiest way to see this is, for example, Canada. Canada's vowed to take in 400,000 a year, and they're going really hard in immigration.
And sorry, is that 400 net or 400?
400,000 net overseas migration, so net.
Net, right? Okay. Well, double what we're looking at, and not that much bigger as a country.
Yeah, so it's about 10 million more people there, but it's significantly larger. So Australia's had the highest intake, or one of the largest intakes for about 15 years. But Canada is going really hard, and they've also reduced their requirements as well. So basically, it's a lot easier to get residency over there now, and to come. At the same time, the UK is doing a similar thing, not so much with immigration, but with international students. So Australia's facing a lot of competition, and one of the key drivers of Australia's immigration intake is actually international students. So if we're facing more competition from the UK and Canada, etc., it might be harder to hit these targets. But at the same time, Australia is also offering more pathways than they did pre-pandemic. So they're making it a lot easier to take lower skilled jobs and then transition to permanent residency. They're giving a lot of carrots for foreign students as well. So if they come here, and they can do extra years of work once they do their degrees, etc. So there is a bit of a war on to try and bring in people across a lot of, across Australia and Canada in particular, and to a lesser extent the UK. So it's really hard to tell how it's going to plan out. But my view is Australia is always desirable, right? We've got a pretty good lifestyle here, and it wouldn't be that hard if Australia wanted to bring in, if we wanted to, we could probably bring in a million migrants in 2 years quite easily, by just dropping the eligibility standards and basically opening up completely opening. So I don't think Australia will have that much trouble attracting migrants. We might have trouble attracting high skilled and highly paid ones.
Okay, that was actually where I was going to leave with the next question. So along these thoughts is, so if they sort of did tighten the criteria in terms of saying, okay, let's try and make sure that the people coming in are more highly skilled, then sort of economically, how different is that versus sort of bringing in the hairdressers and waiters and I guess the service staff for the current economy? Sort of, if we're not bringing in cheap service staff, but instead we are trying to bring in engineers and doctors and lawyers and sort of higher paid roles. How does that sort of fit with your views on interest rates and inflation there?
Yeah, well, certainly. I mean, I'd support that. Not so much engineers, because a report came out, earlier this month, which basically said that half of the migrant engineers are unemployed, another quarter are underemployed. So we probably don't need engineers. But I get your point. If we brought in high skilled, high paid, I think that'd be fantastic. And in fact, if we lifted the requirements to do that, we'd actually see the numbers of migrants coming, fall quite sharply, to probably go back to the historical level around 100,000 a year, just because the quality bar be lifted so high. The amount that qualified to come here would be a lot lower, but they'd be much higher quality. I think that'd be a really good move. So second party questions was, what does that mean?
I guess
for
the question is
interest
saying,
rates?
200,000 people with a high bar versus 200,000 people with a low bar. What just the effects on inflation? Because it's
well, I mean, for start, I don't think you would get 200,000 with a high bar, because I don't think you could possibly feel that, because at the moment, for example, for a skilled migrant, so we're talking about skilled here, not unskilled. In order to come over here in a temporary skilled visa, you only need to be paid 53,900, which is actually about 10% less than the median wage in Australia, and that includes unskilled. So at the moment, the bar is really low, and pretty much anyone can come over here and get a visa and work. It's not particularly hard. We've got about 600 plus occupations on the skill shortage list. Most of them aren't in shortage even now. So at the moment, it's pretty much open slather. And if you raise that to, say, requiring someone, a migrant worker, to be paid 90,000, which is at the 75th percentile of earnings, well, I don't think you're automatically going to cut out a massive amount that normally come, because they wouldn't be able to qualify anymore. So I don't think we could fill 200,000 at a good requirement. So I suppose if we did, lift the threshold, we might probably get more like 100,000. They'd be much higher quality. They pay more tax. They'd be less unemployed, et cetera, et cetera. It'd be just better quality.
Okay.
And that would logically, that would lower wages for professionals, because professionals who would have more competition for those jobs, but it'd lift wages obviously for the lower skilled professions, because they'd be getting less competition from the lower skilled migrants that we're getting at the moment. So net, I'd say it'd actually be wage growth positive, and probably would lead to higher inflation, other things equal, and possibly a higher interest rates, other things equal.
Now, I know they're hard to pin down on how their policies are different to Liberals, but if Albanese gets in, any real differences in your view?
Yeah, look, it's a bit hard to say. Albo and Co have been earlier this month, have been a little bit more circumspect about rebooting immigration. So he has come out and said, "Oh, we should be trading Australians, etc." But I don't know if that's just lip service. I mean, they've been saying that for a while. Labor's been running the line a little bit that we need less temporary migration and more permanent. So what that means for net overseas migration is a bit iffy. He's certainly, I'm not sure if he's just fence sitting, trying to sort of play both sides at the moment, trying to sort of appease the union movement, but at the same time keep the business lobby happy by effectively keeping the number the same. Until Labor comes out with a definitive policy, which we haven't seen yet, I think it's all. I think we can say they're probably in favour. Just a slightly different composition to the Liberals, maybe. A little bit harder on the sort of really low skill, low wage temporary migration, in favour of more slightly better skill. But overall they support Big Australia.
Insignificantly different.
Yeah, that's right. Just sort of at the edges.
Yeah. Okay. So and I guess we've already seen sort of things put off initially. I'm not sure how much you saw, how much when the borders were thrown open, how, I guess, whether there's any stats on the amount that sort of had booked in and now had to cancel or move it till next year. Not sure if you've seen.
So to your point, so the borders are meant to open on December 1st. And because of the Omicron strain of the new strain of coronavirus, the government pushed that back by 2 weeks. But the border did open on the 15th anyway. So it was basically just a two-week delay. I don't think it made that much difference. And it certainly isn't enough to move the needle, over the longer term. All it means is that the start date on that intergenerational report, projected migration graph, it got moved this way. It's moved slightly back that way. So I don't think it's going to make much difference. Like 2 weeks doesn't really move the needle.
No, it's
but then again,
probably more the sign, I guess. It's more the view about, look, are we really open or not? And yes, do I move to this country and then will I be back in lockdown or sent home or without support? I guess.
yeah, absolutely. But Australia wasn't the only country to do that. I mean, some other countries did similar sorts of things. So
Yes.
I guess if you're a prospective migrant, you're looking at Australia, UK, Canada, whatever. They all kind of, most of the countries did some sort of travel restrictions. Especially in response when the new strain first emerged, because people were unsure about it. But then again, this whole discussion could be mute or could be null and void in 3 months, because we don't know what's around the corner, and we could easily start seeing some new strain, or this current strain might end up taking a turn for the worst, and we could end up in some new form of border restrictions globally. We just don't know. But based on the information we've got now, the current plan, and the government's been explicit, is they want 200,000 by July and hopefully more. I think it was the Home Affairs Minister said that basically, I think I'm pretty much quoting, or very close to quoting, as many as possible is what she said late November, in terms of the migration reboot. So they certainly want them back. They want them back quickly, and obviously that'll increase labour market slack. It will make it harder to hit that 4% unemployment level, and it'll be harder to hit those sort of wage growth targets at 3% plus that the RBA wants.
Yeah. Rental growth, though, assuming that rental is positive for home rental growth.
Yeah, and that,
or
mate,
apartment, probably more important.
Rental growth is a strange one. So we've had, obviously, last 18 months almost zero migration, yet rents have boomed, which completely counterintuitive, except in those small areas like, say, Sydney and Melbourne high rise. But across the board in Australia, regional, capital city, etc., more houses than units, rents have gone through the roof. And my working assumption on that is that rents have gone up because the number of people per dwelling has shrunk. As people, didn't want to bunch together, and you've had, kids move out of home, you've had people moving out of share houses, you've had people buy second houses, for example, so it takes housing stock out of the market.
Yep. Increased divorce rates.
Yeah, that's right. Yeah, absolutely. All those factors, because otherwise it doesn't make sense. Like why would rental vacancies fall and rents rise when you've got less population growth? Doesn't make sense. But that being said, if obviously big migration is rebooted, but we're going to have hundreds of thousands of more people moving into rental markets first, which is what they typically do, which will tighten the rental market, other things equal. So unless we get a reversal of those other factors, like the number of people per dwelling rises, it's just going to mean more rental pressure, more rent rises, tighter vacancies.
Yeah. So so the thoughts around I guess it's that it's I think you sort of touched on something I've been sort of looking at putting down in writing some time over, which is this idea that maybe you're with low interest rates, maybe your biggest competitor for people buying into new homes might not be the investor anymore, it might be the second homeowner. Sort of as you start to sort of say, well, that's probably more, and that takes more out of the market, as you said.
And look, I mean, this is obviously anecdotal, but I know about 3 people who've bought second houses. Sort of holiday houses, which they're not necessarily going to rent out, or they're going to rent out a small portion of the year. And then that automatic, it's a bit like the Airbnb effect. Like if a whole bunch of places, former rental homes become Airbnbs, well, that gets removed from the long-term rental market, and that makes it harder or tighter.
And effectively, though, an Airbnb is a second home, regardless of whether it's
Yeah.
your second, regardless of the owner, whether the owner's using it as a second home, it's effectively empty. And, you know, if I'm going to go and rent it, it's not like I'm moving out of my current place and then moving into this Airbnb and then moving back again. Like there's not a, it is genuinely a house that's been taken out of the
Long-term pool.
the pool for people who are either living or renting in a place as a permanent home. Yeah.
Yeah,
So,
and just on the property thing, we've obviously with home builder, as much as I thought it was stupid policy when it came out, and I wanted more sort of social housing, it has been pretty effective in actually juicing construction rates. So just about all those homes that were started because a home builder haven't been completed yet, and we're looking at a massive flood of supply going to hit the market next year. Now, they if we didn't get a big Australia big immigration reboot, we could potentially looking at a several year period of the housing construction industry falling in a hole because they've effectively brought forward all this demand, which is currently being built now and will be built also next year, and then it'll hit the market say from late next year, and then there's going to be a big hole of demand being brought forward, not enough new people coming in to justify building more houses, and the whole construction industry could fall in a hole.
Both parties are on board with this, though, didn't you say? Like it's hard to.
That's right.
I guess. I mean, and while the RBA has flipped its tunes, it would be nice to they show some more restraint. I guess the reality of the situation is at the moment it very much looks as if it's coming, regardless of whether it's good policy or not.
Oh yeah, all the lobby groups, whether it's the edgy migration industry, that's the education migration industry, which is basically one of the same thing, the universities, etc. The property lobby, all the big business lobbies, they all want it, and we know that they pull the policy maker strings and the politician strings more than the ordinary person who's pretty silent on this or views are ignored. So, yeah, I mean, I'm fully succumbed to the fact that we're just going back to the same business as usual model we ran last decade, and it's going to lead to the same results. Where effectively we'll have another decade of, anemic per capita GDP growth, anemic, per capita disposable income growth, and it'll just be basically, there's the Australian Treasury uses a 3Ps framework to analyze the Australian economy. So they basically say you get growth from three things: productivity, labour force participation, and population. That's the 3Ps. Well, productivity growth shot. It's been shot for a decade. We've had low productivity growth for a decade. Labour force participation just before New South Wales and Victoria went into lockdown was at the highest in Australia's history. So there isn't much more juice to be squeezed from the lemon there. And what that leaves is really population growth as almost the sole driver of the Australian economy, which is why they're looking to run this big immigration program because, it does boost growth, but the problem with it is it doesn't necessarily boost per person growth, per capita growth. And that's the thing that policymakers should be looking at because that's what, improves living standards. Obviously, GDP and etc. doesn't factor in other impacts like the environment and quality of life, and whether or not you can get a seat on the train, whether or not you have to live in an apartment or a house, environmental factors, etc. But on pure material economic grounds, policymakers should be looking at the per capita impacts, but they never do, and that's why last decade was the weakest decade in per capita outcomes that the Australian economy has seen on record. Records going back 60 years. So I think Australia's basically going to repeat the same dose as what we did last decade. We're going to get exactly the same results. Another decade of, another lost decade for living standards, effectively.
Excellent.
So,
Well,
Leith, I've just got a couple of questions here.
Sure.
So, in regards to these immigration numbers, are they just workers, or are they workers and students?
No. So the net overseas migration number is basically it's basically it's based on the 12-18 rule. So basically, if you're a resident in Australia for 12 out of 18 months, you're counted as a net overseas migrant. The reason why they do that is if you come over here as a tourist, you're not counted. So basically, the net overseas migration is the the total number of people coming in meeting that rule versus minus those who've left meeting that rule. So so the actual arrivals number will be significantly higher than that, but obviously Australia loses a certain amount of people every year, whether that's Australians leaving or that's some migrants going home, etc. So the net amount is the net that actually comes, basically a long-term resident in Australia, whether that's permanent or long-term temporary.
Okay, that's understood.
And the other thing, sorry, Sam, is worth noting is that Australia's pathways are effectively set up so that you come in as a student, you pay your money to be a student, and then you get an easy path into citizenship. So,
yeah, so you automatically get a 2-year work visa. So you can work while you study, and then once you graduate, you can basically stay and work in any job. It's not skills tested, etc. for 2 years, and then they tend to bounce around from one visa to another before they get permanent residency. So it's kind of like a long form way of backdoor way of getting residency.
So particularly from a country like from a developing country, it's much easier to get in through that than it is to apply directly, I guess.
Yeah, absolutely. And so if you apply directly, you have to be usually employer sponsored. So, and you've got to be skilled. Alternatively, you can get through some state nominations, but you got to have a qualification like be an engineer or something. But you don't necessarily need to have a job. So in a lot of these state nominations, so we have this perverse situation where, as I mentioned before, half of the migrant engineers were brought in actually are unemployed, and another quarter are underemployed because they can come in under these pathways, but then they can't get a job as an engineer because there's just too many of them. So
well,
yeah, the whole system is
or they've come in without the skills that people are looking for.
Yeah, exactly. Yeah,
their English language skills might not be as high, or they might be in programming languages that others that aren't using. So
yeah, I mean, look, it's unfortunate for everyone, really. It's unfortunate for them. It's unfortunate for their country who loses their skills, and it's obviously it's not a great situation for us either. So it's kind of a lose situation when you have those sorts of things. It's a similar story for accountants.
There's some winners in there, please. Property developers.
Yeah, I suppose there is. Yeah, there's always someone who wins.
Yeah.
But yeah, hopefully that explains that. So it's net overseas migration, and it's not just net overseas migration can include both temporaries and permanents. But over the long run, Australia's immigration intake is determined by the permanent migrant intake, because temporaries by definition have to leave eventually. So if they can't transition to permanent residency, they might be able to stay for 10 years, but they eventually have to go home. So it's the permanent migrant intake, which is currently set at about 180,000 once you count humanitarians, that sets the net overseas migration intake. And under the intergenerational report, it's going to go back up to about 210,000. In a year or two. So effectively, we'll be looking at big Australia.
Okay, and it sounds like net immigration, it's going to continue to sort of return to pre-pandemic levels. What do you see playing out if that's going to be the case going forward, and interest rates rise, say, sooner than expected, and then continue to sort of trend up? Like, how do you see that affecting things?
Well, I mean, I think if we get the immigration rebooted at pre-pandemic levels, we won't get the wage growth, we won't get the inflation, we won't get the interest rate rises.
So you just don't think it will happen at all?
No, I don't. So historically, at least, we've needed wage growth between 3 and 3.75% for the RBA to hit its inflation target. And we haven't seen wage growth at 3% since March 2013. So we're so far away from that. It's 8 years since we've had wage growth above 3%, and yeah, sure, it's rebounded a little bit. It's at 2.2% currently, but and there are signs that that wage pressures are rising, obviously, which is why employers are screaming for migrants, because they're seeing the wage costs go up. And my point is, all those inflationary or the wage cost pressures will disappear if we just go back to, if we give employers carte blanche to effectively import people, because that'll reduce employees' bargaining power, and it'll make it a lot easier for them not to grant pay rises, but they can just grab someone from overseas who's willing to work for less. So that's the whole thesis, I guess, here, is that we're not going to get inflationary pressures or interest rate rises if we go back to the same policy that we did last decade.
Okay, that's great. Damien, have you got any final thoughts? Anything to add?
No, I think that's good. Yeah, good point to wrap it up.
Okay, great. So now we've got the viewer question of the week. So this is for viewers to drop into the comments, have a bit of discussion between yourselves over the coming week. So the question is, should Australia return to pre-pandemic levels of immigration? So yep, feel free to have a bit of a chat, bit of discussion. So that almost wraps us up. So just want to say thank you, Damien. Thank you, David, for joining us.
Thanks.
Leith, thank you.
Sorry, Leith.
That's
My
all right.
apologies. Always insightful as usual. We do welcome your feedback on the show, especially in regards to suggestions for future topics. If you do have any ideas, please drop them in the YouTube comments below, or send us an email at contact@nucleuswealth.com. Just a reminder, this is general advice and does not take into account your personal situation. If you do want to discuss how you can personally take advantage of these upcoming trends or themes in your portfolio, please go to our website at nucleuswealth.com, and you can book a call with myself or the team there. So just want to say thanks again to everyone that's watched this episode, and to all the people that have asked questions along the way. Don't forget to like the video now. And finally, if you know of anyone that might get something out of this episode, would really appreciate it if you please share it with them. You can also view some previous content that we've created. So just head over to nucleuswealth.com/content. And you can stay up to date with any news from us on all social media platforms. So finally, thanks again for tuning in. For myself, Damien, Leith, and the team at Nucleus Wealth, we look forward to seeing you again at the next episode, and bye for now.